So, with all the craziness going on this year and kind of the constant fear that another market crash could be on the horizon, I decided to create a new series on the channel. We started this last month, and this is a monthly series where we focus on talking about three brand new stocks every month that I think would be a great buying opportunity during like a big market drop or a crash. And in case you didn't see the first episode, by the way, I'll have all the episodes lumped into a playlist that I'll have linked for you down below in the comment section on a pinned comment. By the way, make sure you hit the like button if you're enjoying the series, it really helps the channel. But in case you missed that first episode, the way that we do this is we pick three stocks. The first stock, we go with a core foundational stock that I think would be a very obvious buy during a bit like a big market drop that you can really build a portfolio around, and it's just kind of a no-brainer to really buy on any kind of dips. Then for number two, we go with a maybe slightly riskier but still a very exciting stock that maybe doesn't get talked about as much, so kind of like a middle of the road type of stock that still has a lot of future potential, would be a great buy during a big market drop or crash. And then finally for number three, we go with a dividend focused stock that you can really look forward to collecting cash payments from into the future and over the long term. Which, by the way, when stock prices go down, obviously the dividend yields go up. So picking up a dividend stock during a market crash is really one of the best times to be buying dividend stocks, and that's why we go ahead and throw one of those in here as well. But with all that said, we've got some fun stocks to cover this month, so let's go ahead and start with our first stock, and that's going to be the core foundational stock of the month. And for this one, I decided to go with the social media giant Facebook, ticker symbol FB. And this is a stock that I've always liked, but never really owned it except for a very brief period of time where I kind of swing traded it. And honestly, I've regretted selling it ever since because it's really proven to be just as a reliable long-term investment as almost really anything else out there. However, one reason why I really like Facebook specifically for this new series where we look for good buying opportunities during market drops is because Facebook is well known for taking some big hits during those times of great volatility, making it one of the most attractive stocks to pick up during those times. As you can see on this 5-year chart, Facebook experienced significant drops during the early 2018 data scandals, the late 2018 Chinese trade war correction, we know that was a big one, the early 2020 pepperoni crash, that was definitely a big one too, and even this past month, the stock has already started to pull back a little as investors probably felt that tech stock valuations have climbed too high and started to subsequently sell out of them. Yet despite all those dips, Facebook is actually still up by close to 200% over that time and over 26% this year alone during what is one of the worst recessions in history. Speaking of which, because Facebook's social media services are so easy to access from virtually anywhere, including your home during any kind of lockdowns or whatever else is going on, their sales are still expected to climb this year by a double-digit percentage and then almost another 25% the year after as well, which is massive growth considering that that would put them up at about $100 billion a year at that point. And because it's a sort of software-based company, they of course carry those software kind of service-like margins as their operating cash flow was close to $40 billion over the past year alone. That's insane profitability. And thanks to it, Facebook has been able to build up one of the absolute best looking balance sheets in the entire market with almost $70 billion of current assets and very tiny amounts of debt in comparison, leaving them with a monstrous current and total ratio at over 6 and nearly 5 each respectively. Very impressive. Of course, all of that money has also helped Facebook make strategic acquisitions and invest in future growth projects, as they are not just dominating the social media space, with Facebook alone quickly approaching 3 billion users worldwide. And if you actually include their other services like Instagram, WhatsApp, or Messenger, they easily surpass that number, which is crazy to think about. But they're not letting any of these gigantic platforms go to waste either. They've already implemented different online shopping and even dating services into their platforms. And I just think it's a matter of time until we see Facebook announce some type of like video dedicated service to even go up against maybe even YouTube as well. But even as it stands, Facebook still has a lot of digital advertising market share to steal, as Google is about double their size in the market, while the market as a whole should also continue to see explosive growth either way, just making it that much easier for Facebook to keep raking in huge amounts of money well into the future. Not to mention that Facebook usually also trades for a cheaper valuation than most other kind of big core foundational stocks too. So if you're able to get it on a big market drop or crash and that valuation is even cheaper, I think Facebook is a no-brainer. It's a great stock to pick up and really build a portfolio around. Not to mention that I really don't think that any other company can really dethrone them in the kind of social media space. I really just see them dominating into the future, because you even look at prior examples, like say what happened with Snapchat, right? Snapchat came up, everybody was talking about Snapchat, everybody was using it. And what did Facebook do? Because they're such a big company with so much cash, they just threw money at the problem. They developed stories for their Instagram, kind of copying Snapchat. And Snapchat really just kind of fell out of relevance. And now, honestly, I don't even know anybody who even talks about Snapchat. So I think that that's going to continue to be the case into the future. I don't see anybody really dethroning Facebook when it comes to like social media. And I just think it's a great play in that space. And I think it's a great core foundational stock to pick up, especially on a market drop, and build a portfolio around. I think it's a great stock. Okay, now moving on to stock number 2. That's going to be our sort of middle of the road type of stock, maybe a little bit riskier, but still very interesting with lots of future potential. And for this one, I decided to go with a technology chip stock that I almost never really talk about on the channel, but it's a stock that I actually do really like. And that stock is going to be Intel. Ticker symbol is INTC, who is known for really being the market leader in CPU processing chips across computers and even the high growth data center markets as well. Now, that market share lead has been falling pretty dramatically in recent years, as AMD, under very strong leadership, has been making a very impressive comeback, which is actually the reason why I used to be heavily invested in AMD myself. Used to be like my second largest stock at one point, but that loss of market share for Intel has essentially left us with an amazing company at a much lower stock price. Since 2018, the stock's volatility has left it relatively flat, with this year also seeing the stock drop by close to 15% as it continues to sit in the lower parts of their 52-week range. But if we see an even bigger drop in the future, this could be one heck of an exciting stock to own. First of all, there's still a market leader even as their market share has gone down, and that's especially true in the very high growth server market, where they still control over 90% of it. In fact, when looking at 2019 sales, Intel generated over $7 billion in just the fourth quarter from just their server segment, yet that was still more than all of AMD's entire business sales for the entire full year. That's pretty crazy. And that strong dominance and performance has led to very nice profits, I should say, overall as well, doing close to $40 billion of operating cash flow over the past year alone, which allows them to spend heavily on research and developments that is desperately needed to stay on top of such a highly competitive market. In fact, over the past year, Intel has not only outspent AMD on research and development, but they've even outspent the giant Nvidia, which is one of my personal favorite stocks. And it wasn't by a small amount either, as they outspent AMD by close to 8 times their amount. On top of that, their high profitability has also allowed them to pay a very nice dividend. Now, mind you, this is not our dividend choice for the month, and yet it's actually a very nice one at over 2.5% yielding, with less than a 30% payout ratio. So plenty of room to keep growing it more so into the future as well. And speaking about the future, that high R&D spending will not only help them compete in really high growth markets like the nearly double-digit growth data center chip market, the highly coveted AI, IoT, and 5G markets, but it even allows them to venture into more abstract areas like the explosive electric vehicle market, where they not only supply processors for charging stations or gate arrays used in powertrain applications, but even their Mobileye subsidiary is a huge autonomous driving play, as their systems are already used by over 25 automakers across 300 plus models and over 60 million vehicles. They're even planning to launch a robotaxi service by 2022. And yet, with all of this market leadership and future potential, Intel has consistently been one of the cheapest tech stocks to own in the market, especially when compared to some of their biggest rivals like AMD and Nvidia, where they sport a forward PE ratio that is around 4 to 5 times smaller. Granted, I do agree with the valuations given that they continue to lose market share while the others have arguably more growth potential, but I still wouldn't count Intel out as a great stock to own. They've been making some drastic changes recently to fight back, like temporarily hiring AMD's provider TSMC to make some of their chips in order to help them with their production issues that have really plagued them in recent years, or the huge, they've also done some huge investments that they've been making to expand their own facilities in an effort to get back on top of the manufacturing mountain. All of it makes for a company and a stock that has definitely been beaten down recently, and maybe rightfully so. But into the future, I do still think that they will recover. This will be a dominant company over the long term. And I think if you're able to pick up this stock during a big market drop or crash, I think that's actually not that bad of an idea, because they definitely have the funding to survive through any turbulence and can still invest in future growth. So I think they'll be a very dominant company. I still prefer Nvidia myself. That's my top pick, and we actually talked about them last month. And then I also like AMD. Maybe we'll talk about them next month, but for this month I like Intel as my pick here, and definitely think that it would be a great long-term investment, especially if you can get it at an even lower price. Okay, now it's time to finish up the video here with our last stock of the month, and that's going to be our dividend choice. And for this one, we're going to go with a biotech that I don't believe I've ever talked about on the channel before. Maybe I have, I don't really recall, but it's a very interesting company, and they carry a dividend that has definitely caught my attention, especially recently. And that stock is none other than Pfizer. Ticker symbol is PFE, who I'm sure you've heard of recently for being one of the front runners in the race to develop a V-shot for the pepperoni, which we'll talk more about in just a second. But when looking at this stock, it's definitely been a volatile ride, which leads me to believe that any kind of market drop will very likely damage this stock even more, as it's barely positive over the past 5 years, and even year to date, it's still down by over 7%. That volatility, though, could land you a very nice dividend that is already yielding over 4% with a solid 10 years of consecutive growth. Now, that yield might go down a little soon because of a new merger that we'll talk about more in just a second, but even then, the stock will still be very attractive, as I'll also explain in just a second. But just like the Intel stock that we just covered, Pfizer also already trades for a low valuation at around 50% cheaper than the sector on a PE ratio basis, so any future drops would only make it that much more attractive. Now, there is good reason for that poor price performance, though. Despite being solidly profitable by billions, if not tens of billions of dollars, their growth has been mostly stagnant at best in recent years. And of course, this year is no different, as sales are actually expected to drop by another 4% as well. However, the good news is that Pfizer has some very interesting upcoming prospects in the future that should help them return to growth. In fact, next year's sales are expected to rebound by almost a double-digit percentage, while their EPS profit growth should be about 14% higher as well. See, not only are they jointly developing a V-shot with BioNTech, who I believe are reporting results from their late-stage trials later this month, but on top of that, they recently disclosed a massive almost 90 different projects that are in their pipeline across 6 different therapeutic areas for diversification, with 23 of them already in the later phase 3 trials. And even though they're spinning off their generics and loss of patent protection business in a merger with Mylan to form a new company called Viatris by next year, existing shareholders of Pfizer will not only own a more growth-oriented Pfizer, but also gain shares in the new Viatris company as well. As far as how that would affect your dividend, though, what we know so far is that Viatris is very likely going to be a very profitable company, and we know that they are heavily focused on paying out a dividend. They're going to pay a dividend right away. So what will end up happening is, if you already own Pfizer, you'll end up owning both companies and you will receive dividends from both, and likely the payout will be about the same, maybe a little bit smaller, but I really don't see any of this as an issue, because if you don't like the new company Viatris, you can just sell that stock and hold on to a very nice, higher growth Pfizer that will still have a very nice dividend, very competitive dividend for all biotechs. And you can just kind of hold on to that, sell the rest. Or if you like Viatris, you can hold on to that too. You've got both companies and you're collecting about the same dividend. And the dividend is already very attractive. And even if it was a little bit lower, it would still be attractive. And considering that this video is about buying stocks during a market crash, if Pfizer was to crash, and say even this happens after it's already spun off the other part of its business, so you've got just a new kind of higher growth Pfizer, say that stock crashes, that could be a very interesting stock, a very attractive stock, because then they've got high growth in their business and they've got an attractive dividend and you're picking it up at an even lower price, that would be kind of a dream scenario. And I think that's probably where I would personally buy it myself. I think at that point, I'd definitely buy it if I saw it during a market crash, because that would be a very interesting company. But yeah, we'd probably still have to do some more research on them. I can't talk about them too much in this video because the video would be super long, and we've already talked about other stocks as well. But anyway, those are some stocks that I would definitely love to pick up during a big market drop or crash. Let me know what you guys think down below. I'd love to hear your thoughts. Is there any other stocks that you'd like to see on the list? And if so, maybe I can include them in a future video. So make sure you let me know down below. I hope you guys enjoyed the video. I hope you're enjoying the series. I hope you're all doing well out there. Make sure you hit the like button if you enjoy the video. It really helps the channel. It means a lot to me. But I'll catch you guys in the next one. Thanks again. Take care. Bye-bye.